So the best way to kind of classify student finance, and if you look at it as a whole, is that there are two main kind of costs, if you like. And the reason that we classify them into two costs is because there's two primary loans that you can take out to cover these costs. So the first of the costs that you can expect to incur are the tuition fees. So these are essentially the costs of the course, and that can be everything to do with the actual teaching side of things, the assessments, practicals, all of those sorts of things. So those are the tuition fees. And there is a tuition fee loan, which is obviously really nicely named, to help cover the costs of your tuition fees. So the tuition fees at the moment in the UK traditionally stand at £9,250 a year. And the majority of students studying in the UK are eligible to take out a tuition fee loan to pay for those upfront, out of the way, and the money will be paid directly on your behalf, and I'll talk about that in a moment. And then the other costs, as I've said, would be the kind of living costs, anything else you can expect to incur, whether that's things like rent for accommodation, maybe bills, food, shopping, socializing, perhaps travel if you're traveling to and from university. All of those types of things would classify as kind of living costs or any other costs. And then the loan which we would probably say you would use to try and cover those costs would be the maintenance loan. So the maintenance loan's a little different, and I'll go into the different loans now to explain how they both work. So the tuition fee loan, as I said, obviously covers the tuition fees. Is what we call a non-means tested loan. So as I said, the majority of students will be able to take out the full tuition fee loan, so the full £9,250 a year for studying at university. And this is paid on your behalf by Student Finance England or the Student Loans Company directly to the university you study at. You won't see that money, you don't need to worry about that money, it's all paid for on your behalf, provided you apply before the deadline. And then obviously you pay for that when you graduate, and we'll talk about repayments later. So that's not too tricky a concept to grasp then. The maintenance loan, on the other hand, is slightly different to the tuition fee loan. It's what we class as a means tested loan. So what that essentially means is that Student Finance England or the Student Loans Company will look at certain criteria, certain kind of personal circumstances for every person applying for student finance, just to kind of decide how much money they need to be given in terms of a maintenance entitlement. Now, there is a minimum entitlement, which is essentially a base amount that every student is eligible for every year, and that currently stands at about £3,500 a year. And then it will increase depending on things like whereabouts you're studying in relation to whereabouts you live. So for instance, if you were, let's say, living away from home and you were living in halls of residence, you would be entitled to a little more than somebody living at home and who would commute to university. So they take that into consideration. They also take into consideration things like whether or not you're in your final year, because your final year, you're actually at university for a little less time, so you can expect to receive a little less as well. And then they'll also look at your household income, and they'll decide, kind of depending on what your circumstances are, whether you live with a sole parent, whether you're with both parents, whether a parent has remarried, and all those types of things can really play into how much of an entitlement you'll be eligible for. So to give you a bit of an idea, this is just to show you kind of whereabouts you may be living in comparison to where you study. So as I said, if you're living at home, you'll probably expect to get kind of the lower amount, as you're probably not expected to be paying for things like rent. But the thing with maintenance loan to take into consideration, and it's really important, especially in the context of this presentation, this webinar today, is that you are actually sent this money. You are sent the maintenance loan to your bank account, 3 installments throughout the year, and you're expected to budget that money accordingly. So hopefully with kind of any questions you have today, and especially with Caitlin's guidance from her own experience, that will teach you a couple of things on how hopefully making it a little easier to budget this money. So those are the two loans then. The maintenance loan is the one which is sent to you, and it's kind of decided upon the certain criteria. As I've said, things like your household income, as you can see on the screen here. As your household income increases, the amount you can expect to be entitled to will kind of adversely decrease at the same time. So those things are worth considering. And as I said, applying for student finance, it's really important that you do apply before the deadline, which usually falls sometime throughout May every year. So you would log onto the student finance portal. You can go through gov.uk student finance, set up your application and work your way through it. It's a very user-friendly form. If you were to say answer no to a question, it may skip you through loads, so it just saves you a lot of time. But it's important that you do take it seriously. You maybe fill it out with a parent or a carer or somebody that you're living with, just to check that the information you're providing is correct. And you would also get given what's known as a CRN, a customer reference number. Now, this is an 11-digit figure, which is essentially a username for you that you need to retain for your entire university degree, or at least while you are taking out student finance funding, because you do need to reapply for funding every year that you wish to take it out. So as you go back to university for your second and third or any consecutive years, you'd be expected to input your CRN, customer reference number, into Student Finance England, just to let them know that you are intending on reapplying. Your parents or kind of any people that you're financially dependent upon will be given separate logins just to verify that the information you've provided is correct. And you'd also have to provide a copy of some sort of identification, like a passport, just to prove that it is you that's applying. So it is very straightforward, but it's definitely something that you shouldn't leave till late in the day, because as I said, you can see on here, the deadline usually falls sometime in May, late May, in the majority of years. And if you do unfortunately miss the deadline, you will probably still be entitled to the funding, particularly the maintenance loan sent directly to you. However, the chances that you will receive the funding on time is quite small if you do miss the deadline. So it's important that if you're quite reliant, especially on things like the maintenance loan for rent or travel, perhaps, then it's really important that you make sure you get that in on time. So applications open sometime in spring, February, March time, and that's just the best time to get started on it, to make sure you've applied on time and you don't have to worry about it whilst doing things like exams. So the way that the repayments work, and I'll try not to dwell on this too much, but the really important kind of key take-home messages from this today are that, firstly, it's definitely not a debt. Student finance is not a debt whereby you'd be expected to repay everything that you've borrowed, perhaps even plus interest, okay? There is interest on student finance loans. However, for some, and maybe even the majority of students, you'll never actually end up paying back enough to pay back everything you've borrowed and the interest. So for now, let's not worry about the interest, because for many students, it's not important. The key thing to remember is you only pay back according to how much you are earning once you've graduated, not in comparison to how much you actually borrowed in the first place. So regardless of how much you took out in student finance loans, tuition fee loan, maintenance loan, it doesn't matter. It's all calculated depending on how much you earn. And you need to be earning above a minimum threshold, which at the moment, at the time of this webinar, stands at £27,295 a year. So you'd need to be earning that much a year after you've graduated just to be able to start paying it back. And then as your income increases, your repayments will increase. If your income decreases, it will also decrease. And 30 years after graduating, however much you have left over to pay back, your balance just gets wiped. So try to think of it more as a graduate contribution system, perhaps maybe just a little increased form of taxation, but it's definitely not a debt or something to be construed as a debt, implying that you need to pay it back, okay? So don't worry about that whatsoever. It doesn't affect credit scores if you're thinking of applying for mortgages. So it's definitely a really useful financial tool when applying to go to university. So that's it, just for as I said, the real whistle-stop tour of kind of student finance and the kind of real need-to-know points, not to get too bogged down, as I appreciate today is more about any helpful hints and tips on managing your money at university more than actually student finance, as I appreciate some of you will probably have already applied for student finance. That's just a nice little refresher. So what I'll do is I'll stop the slide presentation. I'll invite Caitlin back in. Here we go, perfect. And what I'm going to do now is I'm going to pass over to Caitlin, who is going to basically talk to you for a few moments just about her experiences of managing money at university. So Caitlin, over to you.
Thank you very much. Can you hear me okay before I get started? I always end up muting myself and then talking so long on mute. Thank you very much for that, Mark. A great presentation. I first will start off talking about my experience with applying and then going on to my money at university. So my top advice when applying is apply early, as has been said, regardless if you're wondering which university and which course you're going to do. Applying early, as if you're going to go to your dream university, is the best thing to do, because you can make changes later on. Also, talk to your parents about it before you start, because my dad missed off 2 of the documents and it obviously got rejected and I have to resend it back. So make sure you're organised and you get all the paperwork in front of you. So, for example, if you claim any benefits for your parents' work, so my dad got the gym with work, for example, you have to put stuff on there like that because they do pick up on it. But also the application process actually only takes 30 minutes. So if you're prepared beforehand, you can just get it done and then change it if needs be. I applied, I think, in the April or the March, and I got it on time for September. So it is the best thing to do, because a lot of the time, if you're staying in student halls, you need to pay that first instalment of rent pretty much straight away. So if you have the finance in your bank account, that's great. My second tip would be get a student bank account. So look at the bank that you're already with or look at various other ones, but a lot of student bank accounts offer overdrafts. And while you don't want to go into your overdraft, student bank account overdrafts are normally free, so you don't pay back the interest on top of the overdraft. For example, I'm with Nationwide and I think I get up to £1,000 overdraft on my student account. Not that I've gone into it and hopefully won't need to, but yeah, it's just a sort of just in case measure. You also get a lot of benefits on it. So I do get paid interest on the money that stays in there. And it was easy for me to regulate which money was mine and which money was student finances. So I had the student finance money go paid into that account and I knew that was it. I didn't want to touch it. If I wanted to spend any money over what I budgeted in that week, then I go to a different bank account that I had, for example. I also budgeted weekly. So, for example, I said to myself, I'm going to try and not spend more than £50 a week. Freshers, it's a little bit different. You're having a good time, you spend a bit of money, but try and budget and also go to a cheaper supermarket. So, for example, in Birmingham, there's literally an Aldi about 15 minutes down the road for walking, and it never costs you more than about £40 to do a food shop. So try and sort of shop in the cheaper alternatives, because then you save your money that way and also have a bit more money to be able to go out. And if you're shopping, I think I shopped once every 2 weeks, so then I'd have the leftover money to be able to go out or do different experiences with my friends. But yeah, student bank account 100%, and also go on cheap alternatives. When I first started uni, don't get me wrong, it is really overwhelming. It's the first time that I have been in control of my finances primarily. A lot of the time before, my parents had set up my bank accounts when I was younger, and I just did what I was kind of told until I was about 14, 15, and I was like, oh, this is money. Try not to spend it, but everyone says it and it is right. University is sort of always tight for money because the maintenance loan just about covers your rent, or doesn't in my case. A lot of the time they base it off your parents' income because they want your parents to subsidise the differences, which is okay, but obviously it means that you need to plan and prioritise on what you want to end up doing at uni to make sure, one, you don't miss out, but also that you're not constantly in debt, but still having a good time and making most of the university experience. So the thing that I would recommend to help this out is getting a part-time job. So many of my friends, when I